Dogecoin hasn't been doing too well in the last weeks, and this was predictable. I published a video on Dogecoin when its relative valuation to other cryptocurrencies peaked, and exactly at that point in time things turned around. Now the question is, does it make sense now to buy this bottom? How much longer could Doge fall? Let's have a look again at that data that most people are not considering. Now the Memecoin space in general had a hard time in the last week. Prices in the category went down by 22%, while Bitcoin only lost 7% and Ethereum lost 11%. And so Dogecoin was pretty much representative of the Memecoin market. It fell 22% in the last week, but it didn't just start last week. We peaked out at 43 cents on the 18th of January. Now I want to share parts of the video that was published when the price was pretty close to its all-time high at 40 cents. The video was titled, "Is this the Dogecoin top?" And so let's quickly go down memory lane.
Now we see those waves of attention not just in the trading volume, we also see this in relative valuation charts. What we have got over here is the Doge dominance. So how much of the entire cryptocurrency market cap is in Dogecoin? And it appears as if recently we are in somewhat of a trading range. It's not a perfect trading range because those bottoms over here don't really align perfectly, but the current tops tend to be aligning somewhat. This is not necessarily a top that's obvious when looking at the US dollar chart, but when looking at the Dogecoin dominance chart, when we look at the relative standing of Dogecoin in all of crypto, this is a somewhat predictable top.
Now why am I showing this video again? I'm showing this because it underlines how important it is to not just look at US dollar charts. Most beginners do this wrong, and Dogecoin is an asset that's mainly bought by beginners in the market. If you look at US dollar charts and you want Doge to go to $1, then you have to justify this, right? You have to justify this with the market cap. You have to justify this with the relative standing within crypto. And crypto capital flows go from one asset to the next, right? Attention always moves to different assets. And so sometimes it's the Dogecoin price that's inflated. Sometimes it's the Cardano price that's inflated. And so things simply go in waves. And it's very important to time those waves within crypto well if we want to outperform Bitcoin. Because in the end, why do we do all of this meme coin trading, all of this altcoin investing? It's to get more performance than Bitcoin. Bitcoin is the benchmark. We can simply just allocate towards Bitcoin because Bitcoin outperforms most altcoins most of the time. If we want to get more performance than holding Bitcoin, we're taking on more risk by buying those altcoins. But if the altcoins don't outperform, even though we did take on more risk, then we've got a problem. So relative valuations matter. Now those negative news, right? Those bearish news on an asset normally don't get that many views on YouTube because most people that watch videos on Dogecoin already own Dogecoin. In other words, people want to hear positive news. People want to get reinforced in their views. When as a YouTuber, you're publishing a video that goes against your audience views, you tend to get thumbs down, which in turn means less exposure by the algorithm. That's, I believe, the reason why most crypto YouTubers simply just hype up prices. They always say things are going down because if you do the exact opposite, the video will not perform. Have a look at those view statistics. So the average video on this channel is here in gray. And this bearish video on Dogecoin initially got okayish views, average views, but then started underperforming quite a bit. And the reason is clear. Have a look at this, likes versus dislikes. That video only got 90% likes, whereas the channel average gets 96%. And so if you appreciate that I try to keep it as objective as possible, right? If you appreciate that I'm not just hyping up random tokens, then feel free to subscribe over here, right? I publish videos regularly. Now let's revisit that Dogecoin dominance chart. So how much of all of crypto is now in Dogecoin? And the lines that we drew in the prior video still prevailed. And indeed, we did see our top. Dogecoin, since the publishing of that video, underperformed by 35% versus the rest of crypto. At the bottom, it even underperformed by 43%. So it has recovered after yesterday's crash a little bit. But what does this chart actually tell us? When we just look at prior history, we tend to see the rallies happening very, very quickly, potentially when some news come out, maybe when Elon Musk talks about Doge. But when there's no such news, we tend to see Dogecoin underperforming. And it makes sense to buy Doge when it's already very depressed and when there's not that much selling pressure anymore. If we just take past movements as a reference and we overlay that price action to today, then we might just be halfway through. Dogecoin could easily underperform the rest of the market by another 38, maybe 40%. Are we going all the way down to the lows of February of last year? Nobody knows. Maybe we are going to bottom a bit earlier. But right now is probably not the best time to get into Dogecoin. And yes, it's okay if you're holding Dogecoin and you don't like that message to not necessarily give this a thumbs up. But again, if you appreciate what my honest take on Dogecoin is, then feel free to, of course, support this channel. Now, here's another way to look at the situation. What we've got over here is the Dogecoin price relative to the Bitcoin price. So this is not the Dogecoin dominance, but this is the relative performance to BTC. Now, in the last 4 years, owning Dogecoin instead of Bitcoin did not pay off. We tended to see a pretty clear underperformance with lower tops along the way. It's also not that obvious where the bottom is, right? One might say, again, that the February 2024 level is the bottom, but is that true? Because in the past, we had something very similar. We had a prior established bottom, then saw another rally, then saw that rally deflate. And if you then bought at the exact same bottom as what was marked in June of 2022, you still could have gotten stopped out. The move from that bottom to the actual real bottom subsequently was 31%. So it's no exact science, right? Sometimes the market makers move the prices in directions that are not that obvious. If enough people buy a bottom, then the market makers simply just sell and depress the price, especially when there's leverage in the market. And so nobody knows where the price is going tomorrow or 1 week from now, right? There's simply too many market participants, and if a single whale decides to buy or to sell, the price moves. However, even though we don't know the exact short term, we do know what the trading ranges are, and we do know as per tendency if we are currently cheap or expensive. And if we buy a bottom like this, right, and then it continues dropping another 10 or 20%, it might make sense to buy a second time, right? It might make sense to dollar cost average into things like Dogecoin, because Dogecoin isn't going away anytime soon, right? It's the largest of the meme coins. But that's discussing a situation we are currently not in, right? We are very far away from the bottom. Currently, the momentum is very, very bearish. And yes, if enough people bet on falling prices, there can be temporary short squeezes of 25% in magnitude. But if we simply hold during those short squeezes, or we maybe even double down with a secondary short at the second top, then I think that's a pretty obvious moneymaker. Now, nothing is safe in crypto, but still, it's all about directional bets. It's all about expected value. And I do believe that in the next 6 to 12 months, we will see Dogecoin underperform Bitcoin by another 40%. Now, here's something I like to do on this channel. I like to look at the on-chain metrics, as in how many whales are currently in an asset, how many retail investors are in an asset, are retail investors accumulating the token, are the whales dumping on retail? Those kind of statistics are always interesting. Now, the issue with Dogecoin is that it's its own blockchain and there aren't any analytics tools for it out there. However, there is a ported version on the Binance Smart Chain, and that ported version mirrors the Dogecoin price on the centralized exchanges pretty well. So have a look at this contract address. We see the Doge price at 25.9 cents. It's got roughly 3 million worth of liquidity on the Binance Smart Chain, so it's quite liquid. And on-chain, we've got 925,000 holders. So there is some data to work with. Have a look at this. This is the number of retail investors versus whale investors. And the way we make this distinction is by looking at minimum holder thresholds. So in order to be counted for the chart on the left, a wallet has to hold at least 4,000 Doge. So at the current price, it's roughly $1,000 worth of the token. To be counted for the chart in the middle, a wallet has to hold $10,000 worth of Doge. To be counted for the chart on the right, it's $100,000 worth of Doge. Now, those are very long-term charts. They start at the beginning of 2021, but we can clearly see how even the number of retail investors isn't really growing that quickly anymore over time. In the last year, we have barely seen any growth of Dogecoin holders on the Binance Smart Chain when we filter out all those very small bot accounts, etc. Right? When we just look at the accounts that actually do have some significant money in this. The number of whales is also developing very similarly. Again, in the last year, we haven't seen any net growth. And especially in the last few months, we rather saw some whales taking profit. We didn't see that profit taking for the other wallet cohorts. Here's the number of new Dogecoin investors over time. So that's just for the last month. This continues to trend downwards. And here's the number of buyers and sellers over time. Dogecoin trading does happen in waves. And ideally, we want to buy when the number of buyers buyers and sellers is rather low and you want to sell when it's rather high. Currently, it still tends to be somewhat elevated. There's the same data here on the right. It's just normalized to 100% per day.
Here's the thing. The market isn't expanding as quickly anymore as it used to, right? With the Trump push, now the question is what can come that's even larger than that pushes prices even higher. And because of that, because it's more and more player versus player, even though the market in aggregate might be somewhat balanced, it's still just a few assets that outperform everything. Have a look at this picture. The tokens that are between 101 and 200 in terms of market cap, they in the last month went pretty much plus minus zero, right? They gained slightly. But when we look at this picture here, that's just because there are a few massive outliers. And the question really is, when we look at 100 tokens, how likely is it that we are going to pick Toshi or the Swift coin or AIC? Especially when we hold a diversified portfolio and we have, say, 5 or 10 altcoins, the likelihood is pretty high that that altcoin portfolio is going to underperform. Because if you held AI16Z and you made a minus 76% loss, or you held Turbo and you lost 40%, or you held Memecoin or Mu and you're down more than 30%, it's very hard to still have positive performance. And I'm a fan of trying to get the odds in our favor, right? It's possible to pick the winners if you are very early and if you adopt something like Trump in the earliest hours and if you are one of the top traders, that is possible. But if you don't have time to watch the crypto markets 24/7 or if you're not based in Asia, then it's very, very hard to get those winners all the time. And so why not go the easy route? Why not simply bet on falling prices? If most altcoins do worse than Bitcoin most of the time, and if there's just a few assets that outperform that massively, then we can just pick a random asset over here and we are very likely going to make money in the next month. We just have to make sure that we don't fall for those few tokens that are discussed everywhere. When we bet on falling prices of Chili's or of Safe or of DYDX, then that's a comparatively safe bet. It's definitely still risky because this is the crypto market and the crypto market does get manipulated, but it's less risky than trying to find the needle in the haystack. And there are some tokens that underperform more consistently than others. For example, this one over here, Balancer. I started shorting Balancer in the middle of 2022. I went on and off about that position. Sometimes I was short, sometimes I was out of the market taking profit. But since that point in time, Balancer underperformed Ethereum by more than 80%. So it's not just that most altcoins do worse than Bitcoin. It's also that some of those altcoins underperform most of the time. And so I've made several videos on this topic. It's a comparatively advanced topic because it's also easy to get burnt with shorts. That's why most retail investors don't get involved in this. But there are premium tutorials how to win in bear markets by shorting altcoins. It's 42 minutes in length. Then there's another video gaining from relative valuations. Then there's another one shorting optimism relative to Bitcoin. This has been published quite a while ago. This, by the way, is now optimism relative to Bitcoin. So this was a good position. And the reason why most altcoins do worse than Bitcoin is tokenomics, as in more and more tokens get issued over time. And if the demand cannot keep up with the token issuance, then the price has to underperform the rest. Now, this is not a good strategy during a massive bull run, but it is a good strategy during a bear market, of course, but also during sideways movement. Because again, even during a sideways movement, money flows just into a very few basket of altcoins. Most alts do worse. And so this is all part of the premium membership of this channel. Premium is not just about shorting, it's also about on-chain analytics. It's also about portfolio management and risk mitigation. There's more than 100 tutorial videos in total in premium. Now, this is not a topic to make a 10x next week, but it is a topic to outperform steadily and slowly. And if you can only outperform, say, by 30 percentage points per year, and Bitcoin itself already grows by 30% per year, which I believe is somewhat of a conservative bet. Then if we do this over 4 years, and again, we don't have to trade very actively, we can 8x our capital. Now, if you have just a few $100s of invest, then an 8x within 4 years doesn't really sound that great. And then by all means, feel free to gamble with that money, right? Because you can also recoup the money very quickly just by working more, just by saving more. But if you've got already several years of your income saved up, or if you've got $10,000, $50,000, if you have more money, then an 8x does matter, right? 10K becomes 80K in a relatively okay-ish time period. And so I actually find it easier to make money in bear markets and during times like this. Again, because we don't have to pick the winners. We can simply have a diversified portfolio of short positions. Again, because most altcoins underperform Bitcoin most of the time. If you own a lot of altcoins and you hold them over 10 years, you're probably not going to do that well. Because have a look at the top tokens 10 years ago. How many of them do you really recognize? Paycoin, BitShares, MadeSafeCoin, NXT. Yes, Stellar is still around, Dogecoin is still around, but where is Peercoin, Counterparty? Dash also underperformed Bitcoin quite a lot, so did Namecoin. So really the crypto markets are not venture capital markets, right? The crypto markets are very much player versus player, and it's better to simply bet on the vast majority doing worse most of the time. Not in a bull market, but most of the time. And I believe currently this does apply. Currently we are in most of the times. The crypto valuations are comparatively high. A lot of people made profit and took profit at 100K. And so if your portfolio is large enough, it's not just a few $100s, but it's maybe in the $10,000 and above, then feel free to check out the premium membership. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, simply message me within the first week and I'll refund you 100%. There's really zero risk for you.
Now, given that the price for Dogecoin seems to be somewhat inflated and that momentum is going down, does it potentially make sense to even short Dogecoin now? Because in the end, relative valuation doesn't necessarily always translate into US dollar valuations. And most times when we short an asset, especially on centralized exchanges, that is versus the US dollar, not versus Bitcoin. Now, there are still a few selected altcoins that went up in the last week. Most of those altcoins are not Memecoin related. They're rather technical in nature. They are layer 1s and they are DeFi. Within the Memecoin sector, pretty much everything went down. Now here's what's very important with a short position, because even though Doge relative to Bitcoin and Doge relative to the rest of the market looks very weak, the altcoin market itself might be short-term oversold. This here is the others dominance, and we are very, very close to the bottom. In other words, if we see a short-term bounce, you have to be okay with doubling down on any short that you're currently opening. There is a risk of at least a short-term rally. Longer term though, let's say over the next year, I do believe that Bitcoin is likely going to outperform most other altcoins. What we see over here is the Bitcoin dominance, and this tends to go up since the middle of 2022. So this line is simply just a representation of that recent rally. And whenever the Bitcoin dominance is going down, that means that Bitcoin as a share of all of crypto is crashing. In other words, the altcoins are doing very well. When this chart is going down, there's altcoin season. When this chart is going up, the altcoins get hammered. And so in total, since the middle of 2022, the altcoins didn't do that well. Even though we had Trump launching a meme coin, even though we had all the speculation with the Pump.fun ecosystem on Solana, even though we had the Virtuous protocol on the base chain, as a whole, the altcoin market did not do that well since middle of 2022. And it might take a while until we see a real altcoin season. If the Bitcoin dominance continues to rise at a similar pace to what we have seen in the last months, it could take until the beginning of next year, until the altcoins are really a steal. And then, of course, the things that went down the most will also rally the most. And probably Dogecoin will be among them, because I do believe in the next 12 months, Dogecoin is likely going to do worse than Bitcoin. I don't know what's going to happen tomorrow. I don't know what's going to happen in the next week, but over the next 12 months, I would be extremely surprised if Dogecoin was to perform better than BTC. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.